Oh! Whoa! What's going on, YouTube? Welcome back to the Blackfire Technical Analysis YouTube channel. I am your host, Crypto Bro. We are back at it again with another edition of the daily live stream. Happy fucking Thursday / early Friday morning. I can't even talk right now. I'm a little pumped up. Coming back at you, that's right, with another live stream. Got plenty to talk about, got plenty to update here today, and we shall get down to it. First things first, though, I want to let everybody know in the community that I have strengthened my 21 exponential moving average strategy with another simple moving average strategy that doesn't have a name. It's just the utilization of the 10 SMA with the 20 SMA. And if you're on cryptocurrencies, it's going to be the 22 SMA, the 22 simple, and the 10 simple here. As you can see, I have them identified by the red 10 simple here, colored red, and the blue 20 SMA, simple moving average here, identified in blue. And then obviously I'm still going to correlate all of my trading with the 21 exponential. Again, that will be the definitive factor here for my trading strategy. The only thing that changes here is that I have another referenceable strategy to add or take away strength from a perceived entry point or exit point. And basically the way that the SMA strategy works, it's as simple as this. If you see the 10 simple cross above the 20 EMA, damn it, SMA, I'm gonna get that confused all fucking night, I promise. If you see the red 10 simple cross above the blue 20 simple here, that is an entry signal for a long position. And then you hold that long position until you see the red 10 simple cross back down below the blue 20 simple, at which point that would be classified as a short entry position. Quite simply put, the way I'm looking at it here is if I get an open enclosure above the 21 exponential here, and I also see a confirmation entry signal on the SMA strategy, that is going to be a very, very, very big confirmation signal. That's going to give me more confidence that the entry is more valid than not. So I'm going to be using these moving averages for the foreseeable future. Again, I was just going through my trading notes, I was going through my educational notes, and I was going through all the different strategies that I do know and that I have experience with. And I came across this one. I said, I wonder if that could potentially add strength to the current strategy that I'm currently utilizing. And I did some research on this, and it does add strength. It does add validity to entry signals above or below the 21 exponential. So I'm going to be using this. Again, please trust and believe that I will still be utilizing the 21 EMA strategy for the most part. As my main signal of confirmation. But again, seeing the red 10 simple cross below the 21 exponential for a short signal at this at the same time or a few days later than opening a short position is only going to increase my confidence that the price action direction to the downside is going to play out rather than not. So that's going to be the new addition to the channel for now. I won't reference these moving averages in any other way other than adding strength or taking away strength from a perceived signal. Now, there is an ongoing debate/research debate as to whether or not, taking signals from the simple moving average strategy is more profitable when tied in with the 21 exponential. I cannot confirm nor deny that. I have not ran my conductive research just yet, so that's going to be a little while. I have to run about 500 different moves. And then basically, take the average profitability versus not profitability. Again, the argument is it more profitable to take the 21 signal immediately when closing a position, or wait until you see the crossing signal from the 10 simple and the 21 simple? Again, there is valid arguments. I did identify a couple of examples where it was more profitable to do it that way, and I also found a couple of examples where it was not as profitable to do it that way. So I'm going to compile a bunch of research together and come to a statistical determination as to whether or not that is the case or not at the end of the day. So that's it. Business as usual. Let's get to it. NASDAQ consolidating. I mean, I didn't want to say I fucking told you, I kind of fucking told you. Kind of told you. Very, very, very obvious sideways motion right now. Obviously, it was a little more skeptical with this big rejection of tentative resistance here. I was going to be looking for possibly, trailing down to the bottom side support. Instead, we shattered and boom, came directly down and then closed a secondary reversal style candlestick on that support here. We do still have tentative support and we do still have the greater range at play here. Now, what is important to remember here is that we still remain below the 21 exponential here, and we are still in, a downtrend. We are still within the downtrending motions here. I am going to be looking at this as a lower high, depending on how price action reacts at the end of the day. So again, with the RSI flagging that lower high, back below the exponential, it is very possible that we do see this support level here break and breach to the downside. And if that condition is confirmed, any open and closure below 11,890, I will be looking for continuation. Again, obviously the first target, a little bit of a soft target here, not a very significant level historically speaking. But I would be looking for $11,500 to the downside. But overall, I'd actually be looking for $11,100, maybe $11,125, give or take a few bucks. That would be the main target to the downside that I'm going to be observing if that condition is met. For now, we are holding support, which means I'm treating this like a consolidation phase, right? I'm treating this like a sideways range. So as long as we hold this support, I am going to be looking for price action to move all the way back up towards tentative resistance at 12,600, which is right in line with that 21 exponential at the current moment in time. I would look for a tentative test of that region. I'm going to be looking for this to play out sideways for the time being. Again, unless I get a signal above or below horizontal support and resistance. If we do see an open and closure above resistance here at 12,600, I'm actually going to be looking for price action to burst back into this blue box territory, looking for the $13,100 region is going to be the next upside target that I'm going to be paying attention to, again, if and only if the condition of breaking the range to the upside is met. And then when we come down here, looking at stochastics, RSI, we do have a little bit of a triangle formation. Whether that's valid or not, it's there. It's present. It exists. It counts. We have plenty of touch points to validate this as a triangle formation here. We got what? 1, 2, 3, 4 points hitting that ceiling of resistance. And then we got 1, 2 points holding that tentative support. Currently, we see RSI kind of going upwards a little bit, flatlining that RSI exponential just a little bit, but I digress. We still remain in the bearish neutral territory, which is not bullish in any way, shape, or form, especially considering the overall trending formation right now with NASDAQ and everything else. But I will say it is very probable, it is very possible to see continuation to the upside if we do confirm below the 21 on the US dollar index, which we will get to momentarily. Coming down and checking out the stochastics here, looking really weak. It doesn't, again, a lot of this isn't convincing, right? A lot of this stuff doesn't say, it doesn't speak volumes. It doesn't tell me, yeah, this is absolutely breaking out or breaking down, right? It just tells me more sideways possibilities are still here. If I can pull out the right horizontal here. Again, we do have top side resistance, boom, right here, bottom side support, boom, right here, and we've been seeing stochastics kind of coiling around, going sideways between the bottom of the bearish control zone and deep in the bearish critical territory. So, again, it's just indicative of, sideways consolidation until, again, the bottom side of the range breaks below 11,870 or the top side of the range breaks above 12,600, give or take. And that's going to do it for NASDAQ for now. Again, you please remember we are in a bear market here. I have absolutely no reason whatsoever to believe that this price action is going to flip and reverse to the upside until, at a bare minimum, I see higher highs above the top side of this range. That's it. And even if that condition is met, I'm not convinced of jack shit long term until we break the ceiling of resistance, this diagonal trend line of resistance. So that sentiment is implied across the board for almost everything that we're looking at here today. SPY futures. Confirming lower lows. Confirming lower lows, but still holding tentative support at the current moment in time at $3,900. Same thing. You could argue, oh, just open up the the range a little bit. It's very possible, but I take the signal of confirming lower lows very seriously, and we did just confirm lower lows, which to me is a little classification of downside continuation, especially if we confirm this region here at 39.10 as new tentative resistance. If that condition is met, if we do see today's candle close below that region to confirm new resistance, I will look for continuation all the way down to $3,800. But the overall general target to the downside is going to be somewhere around 36.85 for me. The only thing that convinces me otherwise would be a full-on burst above, again, the top side of the range here, above 4090, $4,090, which would coincide with a breach of the 21 exponential. Any open and closure above that 21 exponential, I will be looking for a big move, a big continuation drive all the way up to that blue box territory around $4,300. Momentum oscillators look very similar on this formation here. Downtrending formation, triangle formation. We do see a little bit of pressure to the upside, but again, that exponential is still flatlined / very slightly negatively sloped in the bearish neutral territory. Again, does not speak volumes on the bullish potential right now. Still speaks volumes that the bears have control of this market. Stochastics eerily similar as well. Chop it around, sideways, 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 indicative of more sideways continuation. Until we see a breach and confirmation of resistance breaking or support breaking, I'm looking for that sideways direction here. Again, there is no crystal ball, kind of when is this going to happen. I can't tell you when it's going to happen. All I can say is pay attention to these, pay attention to these levels here. Again, 4090, spot 75 being current resistance, and 39.15 being the support. Either one of those breaks likely tells you the directional movement of price action. Moving on to the very important juice of the matter here. Boom, US dollar index breaching the 21 exponential here, and we do have a little bit of a negative slope. Now, am I convinced that this is the end all be all for the US dollar index? Again, when in doubt, pull out. That's an absolute fuck no. US dollar index has been bullish for the longest time. A little bit of a top, maybe a pullback, maybe to 100 spot 75, maybe 100 spot 80, to potentially confirm a macro structural higher low. Doesn't tell me it's going to be the end of the US dollar index bull run here. The only thing that would tell me that the bull run for the US dollar index is over would be a change of behavior below this point here at 97 spot 82. Any open and closure below there to confirm that support level as new tentative resistance would most certainly confirm to me a massive long-term change of behavior. And then we can start talking about the US dollar index coming down and possibly the rest of the market reversing to the upside. For now, we are possibly looking to confirm below the 21 exponential. If that condition is met, I'm actually going to be looking for this region to break at 102 spot 52. I'd actually be looking for, boom, this target here at 101 even. 101 even, 101 would be the general target to the downside that I'm going to be looking for, again, if we do confirm below. Now, if we don't confirm below the 21 today and we see a pop back up, could be possible that we're looking at possible higher lows right here, right now. But for me to be comfortable with that, I would need to see a closure above yesterday's open at 103 spot 83. If that condition is met, I would likely look for a higher low formation here and possible bullish divergence on the RSI, and that would likely send price action back up towards the current highs at 104 spot 75. Now, we all know where we're going with this one. Any open and closure above the current high leads me to the next target, which is the 1 spot 272 Fibonacci extension right around 105 spot 70. I would be looking for price action to ebb and flow its way up to that point. Again, if we do confirm higher highs with confirmation, that would be the case. Now, here is the reason why I'm skeptical on an immediate move to the upside. Number one, we have RSI confirming below the bottom side of the bullish control zone, breaching through the diagonal trend line of support here, looking to confirm that as tentative resistance. That is critical signal number one. Critical signal number two is stochastics breaching the 50 read to the downside, now within the bearish neutral territory. That is indicative of continuation to the downside, and trend. Warning shot number 3 was the initial breach below the 21 exponential, forcing it to a negative slope. Confirmation today definitely gives me confidence that we see a greater pullback at a minimum to that $101 region here for the time being. Now, again, from the macro perspective, it doesn't fuck with the trend, in my opinion. We need to see a major decline in the US dollar index for me to be convinced that we're going bearish on it. Until then, it's just a dip, bro. It's just a dip. I'm still going to be looking for higher lows at that 101 support level. And if not, maybe even all the way down to 99.30 here, I would look for higher low formations to possibly print around that region as well if we don't do it at the 101 region. But again, from a macro perspective, this one is just absolutely bullish. Even the weekly tells you it's probably time for a little bit of a cool down period here. We've been absolutely ballistic for a while. Since June 2021, since almost a year ago, we've been absolutely ballistic on this price action. So, it doesn't go up forever. At some point, it's going to see a little bit of a decline, and in my opinion, it's not a bearish decline. It's a healthy retracement. It's a healthy correction of price action. It could potentially lead to a higher low formation, which would inevitably send price action to possible new higher highs, which again, in turn, would just signify the continuation of the bear market for the rest of the market. Moving on, I want to check out, what do I want to check out? Maybe a little bit of an update of the Hall of Fame Village. Not too much to cover here. Very, very, very same story. Was that negated? That lower high was negated. Oh, that lower high was negated. Still, it's not healthy. Hall of Fame Village is not healthy here. Fresh breach out of the bearish control zone, looking to possibly confirm it as support. That's probably the closest thing to possible momentum we've seen in a long fucking time with this asset here. Did confirm the top side of the bearish control zone as tentative support here. It gives me a little bit of hopium here. We do have a positively sloped exponential as well, so there is a little bit of momentum buildup here on the RSI from the daily perspective. Stochastics still continuing to the upside as well. I'm going to mark off the critical zones, the critical territories here for stochastics on the Hall of Fame. Boom. It doesn't have to be perfect. 35, 50, and 65 here is what I'm going to be looking at. Yeah, deeper into the bearish control zone, moving towards the top. Again, we do have a signal of possible momentum here, but what really grinds my gear with this chart here is the fact that, again, we're still rejecting the 21 here, and then that big move to the upside hardly even moved the red 10 simple. If this was a legitimate move to the upside, that red 10 simple would have done something, man. It would have done more than just go, right? A little bit of pressure to the upside, not even positively sloped, anything. Again, nothing on this chart convinces me that we're going to see any type of continuation to the upside until the bare fucking minimum is confirmed. An open and closure above the 21 would convince me that we could test the prior lower highs right around 86.5 cents. Open and closures above 86.5 cents is a change of behavior, at which point I would look for continuation towards about $1.07. However, after rejecting the yellow 21 here and seeing this region here not confirm as new supports, still acting as tentative resistance, it leads me to believe that price action also has the possibility to see a steady decline all the way back down to the current lows, the all-time lows at 63 cents. Any open and closure below that region here, again, since we don't have any price action history below the all-time lows, I have to go off of psychological levels. 50 cents, right? What's the next thing under 75 cents? 50 cents. It's going to be the next target that I'm going to be looking for here. Again, as you all know, the Fibonacci retracement levels do not work on this price action chart. I mean, maybe if I do one of these here. Let's see if this lines up in any way, shape, or form. Hey, look at that. Look at that. I can do a smaller formation with the Fibonacci retracements here. Yeah, kind of playing around with the 1 spot 618 here. Any open and closure, yeah. 45 cents, pretty damn close to 50 cents would be the overall target. I would look for the psychological level at 50 cents because, again, there is no historical relevance at the 45-cent region. So I'm going to stick with my guts. Stick with my guns. Yeah, if we see lower lows, I'm going to be looking for 50 cents and a possible move to the 2.272 Fibonacci retracement zone at 45.5 cents. Not looking good. Again, from a trading perspective. Now, from an investment perspective, I do believe in the Hall of Fame Village. I do believe it's a great project. I do believe that people are panicking about it for no reason because it's not even fucking built. They're not even generating revenue. You know, a water park that's not built. You can't go to a water park that's not built. You can't go to a casino that's not built. You can't go to a hotel that's not built. It's not built. So let it die, in my opinion. Let it go as low as possible. I could scoop up a bunch of shares, possibly be a big bag holder for this asset, and then 5 to 7 years from now, watch it turn around when the business is booming. And that's going to do it for that one. Apple confirming lower lows, breaching tentative support. I will look for a little bit of a pop-up to the 138, 139 region here to potentially confirm it as new resistance. If that condition is met, I will look for the next relevant target, which is right here at 135.20. But realistically, I would also look for the next target to the downside as a possibility, right around $130 even. Now would be the time, in my opinion, if we do hit this target. I would expect a bounce again to try to test new tentative resistance, but momentum isn't looking real juicy here. RSI, boom, rejecting that exponential once again, looking to confirm lower lows in this oh my god, I can't talk. In this RSI formation, and then stochastics at the same time, rejecting the bottom side of the bearish control zone weakly, right? It's weak. It's not like a severe rejection, but it is a reaction. It is a reaction off of that critical level, off of that 20 read for stochastics. But again, I would be looking for general continuation, especially if the rest of the general market continues to go down. That means SPY futures, NASDAQ, Dow Jones, if those continue to decline, I would have no reason to believe that this one's going to hold up. This one also took out a very major level today, and if we do confirm that as new resistance, it likely continues to the downside. Momentum oscillators are beat up across the board. Price action is in a bearish market. Again, nothing's convincing me otherwise. At this point, the only thing that would convince me of a change of behavior would be an open and closure above 149.40 until that condition is met. As long as we're below that region, I'm going to be looking for continuation to the downside. AMD still above the 21 exponential, giving a very soft confirmation signal as well from the SMA strategy perspective here. We do see the red 10 simple above the blue 20 SMA, and we also have confirmation for 2 days now above the 21 exponential. Per my trading strategies, I can't go against my strategy, right? As long as we remain above the 21 exponential, I'm going to be looking for price action to pop up and potentially test this diagonal trend line of death and destruction here. Doesn't really necessarily convince me of full-blown reversal. However, we do have pressure being implied to the upside. We do have stochastics continuing deeper into the bearish neutral territory. Very, very close to the bullish control zone here, albeit it is a little weak in my opinion, but nonetheless, it is vertical, and we do have RSI here kind of positive, very slightly positive, but what's really important is the fact that that RSI exponential is also positive, and we have an uptrending structure here from a momentum oscillator perspective. So while that evidence is present, I do have to go with this side of possibly seeing continuation to the upside up until the point we see an open and closure below the 21 exponential, at which point I would look for a full drive all the way back down to $85.50 and maybe even possibly confirm lower lows. I would look for 79.75. However, if we do breach tentative resistance right here at 98.73 and confirm it as tentative support, I would look for, yep, you guessed it, that continuation drive somewhere towards that diagonal trend line of death and destruction. And yes, very much also possible to see a test of horizontal resistance right around 112.10, at which point, again, since this is a weak signal, I would absolutely be closing my position. Not financial advice. I'm not a financial advisor. I will never tell you what to do with your trades or investments, but this is what I would do in this current situation with my trade. Again, because we are in a structurally bearish market, a long-term bearish market. Trades above the 21 tend to not last as long as trades below the 21. And since we are above the 21, I am on my tippy toes. And the first sign of profit, I'm going to take it, close the position, and await the inevitable destruction if this market continues to be bearish. Got one more here. I want to check a look at Pepsi. Pepsi absolutely melting here. I love talking to my brother about this because he has no fucking clue what he's talking about. He has, his perspective is, we haven't taken out the March lows yet, which are right fucking here. That's coming, buddy. That is fucking coming, in my opinion here. Big decline below the 21 exponential and then confirming. I would look for a bounce and possibly a big move back up to the 167.92 resistance here. But we do have resistance, and I would look for it to tentatively confirm a lower high. Big drive, big bearish divergence drive, sending RSI through the 50 read, vastly sloping that RSI exponential to a negative slope here. Very, very, very critical signals. Stochastics looking like it's just breaching, right? We didn't hit close to the bullish, close to the bullish control zone. Maybe you could classify that as a rejection of the bearish control zone, but we do see a breach of the 50 read here, which is a critical signal. So we do have all warning shots fired off for confirmation. First warning shot fired, confirmation below the 21 exponential. I'm looking down. Second warning shot, bearish divergence, sending RSI through the 50 read, exponential sloped to a negative, and then stochastics here breaching the 50 read. I have all the evidence to suggest that taking a trade below the 21 exponential is highly probable to be profitable at this current moment in time. Again, not financial advice. This is not financial advice. This is what I would do. And realistically, if we see an open and closure below 160 here, ain't much stopping price action here from hitting those lows. I mean, we do have this region here. I would look for a tested target at like 157.5. But ultimately, I would be looking for the major lows to be tested here at 153.5 bucks. Any open and closure below 153.5 bucks is a significant long-term change of behavior. And then you can get the general idea of where price action likely ends up. 149.18 is the first target. Second target being like 142.5. And at this point, we have a strong case to suggest price action does not recover back into its bullish stature. Now, I could be wrong. We could confirm some kind of higher low formation here. Yes, that is true. We could confirm a higher low formation here, but until we see higher highs above 176.14, I'm going to be looking for tentative rejection at the 167.85 resistance to send price action into a potential downtrending bear market, just like the rest of the market's doing right now. Pepsi's actually been the healthiest so far. Trading wise, with the rest of the market being in a bearish formation, and now finally it decides to go boom, boom, boom to the downside. Likely sees continuation. Again, I could be wrong, but the evidence is just too powerful for me to go against it, right? When I have a trading edge, and my edge is flashing off major signals for potential profit, I'm gonna fucking take it. I'm gonna take that edge. I'm gonna run with it. We are below and confirmed below the 21 exponential. We are below and confirmed below the 50 read, and we are below the 50 read on stochastics. So big signals, lots of evidence to suggest continuation, and that's going to do it for Pepsi. We're going to do one more for the night, ladies and gentlemen, unless anybody drops a comment and have any kind of requests for the night. This is going to be the last asset that we do a little bit of a look at here. Bitcoin still ranging here. We did breach and confirm lower lows yesterday. It was not significant enough for continuation. It just opened up the range a little bit more. Give me 1 second. There we go. Gotta take some of this water. So Bitcoin still ranging. Bitcoin still providing a lot of evidence that we see range continuation for a little while. And this one's clear cut and dry. Any open and closure below the bottom side of the range at 28,600 bucks. I'm going to be looking for continuation all the way down to, yep, you guessed it, 24,420. 420. Any open and closure above tentative resistance and confirms new support above 31,350. I will look for continuation above the 21 exponential towards 34,860. Now we see RSI here, very weak, right? very, very sideways in the bearish control zone. Nothing, confluent with, continuation to the upside. Not just yet. We are above the bearish control zone top, but we're still, from a price action perspective, we're still sideways. We are still sideways. So there is no signal to be had there. Same thing with stochastics. Above the bearish control zone into bearish neutral territory, while price action remains in a sideways motion. No signal to be had there. Very easy analysis, at least from my perspective. I'm waiting for price action to breach the support or the resistance, and that's kind of going to be doing it for Bitcoin. Again, we are in a bear market. There is nothing you can suggest to me that would convince me otherwise. Too much evidence is present here, so I do have a bearish bias for continuation to the downside, unless I'm proven otherwise. And until then, I'm looking down. I'm looking sideways and down, ladies and gentlemen. And that's going to do it for the stream tonight. Thanks for coming through. I did have a couple of extra viewers tonight, which was pretty nice. Thanks for coming through. Thanks for watching the channel. Hope you enjoyed it. Hope you learned something. Come back again Monday. I won't be on until Monday for another analysis stream. Fridays, I like to hang out with my wife. Unless my wife's working. If my wife's working, I'll be on tomorrow. If my wife's at work tomorrow, I will be on tomorrow. I will stream tomorrow. But if not, I'll see y'all Monday. I will be on in about 10 or 15 minutes. I will be playing some Returnal. Once again, fucking game is absolutely intense. I crave the violence. Come check it out if you want to. If you want to hear me cuss up a storm when I'm absolutely shit in the bed, come on through. Check it out. It's a good time. And until next time, ladies and gentlemen, you already know what it is. Stay safe. Stay happy. Stay healthy.